Apple shares $503.74, down a little more than 1%. The stock was around 510, 509 on Friday, so down a little bit. You can see they're down another $6, circling the $500 level. They had some good news over the weekend out of China, but still the pressure is on Apple shares. Market Watch's Dan Gallagher got up early to come talk to us today on this one. Dan, what's the latest with Apple today?
Well, I think, Paul, what we're seeing, we had the statement from them over the weekend about the iPhone sales in China, but that really hasn't stemmed this kind of groundswell among analysts that who think that the iPhone 5 is not going to sell quite as high as expected. Not so much December quarter. The concerns are still, the estimates are still pretty good for December quarter, but going into the next year, there's a lot of estimates that are starting to come down. And we saw a downgrade of Apple on Sunday from Citigroup. And that's the first, I think, significant broker that's made a downgrade of Apple in quite some time. And that's really built on some negative sentiment on these guys.
Yeah, I thought the Citigroup note was interesting because they said that they were talking to suppliers in Asia, and they said at the beginning last week, and at the beginning of the week, everything sounded great, and by the end of the week, it had become apparent that Apple was cutting orders. So you're seeing some weakening of demand. Here's sort of the big question, right? Apple has had this field basically to themselves for a while. That is definitely changing. How much is that going to affect them?
Well, the iPhone is their most important product by a long shot. It's their biggest single source of revenues, even bigger contributor earnings. So it's a product that they really, that I think the stock really depends on to get right. The iPhone 5 is a very well-reviewed smartphone, but when you consider the fact that there's a lot more competition in smartphones now, Android is doing really well, and a couple analysts have raised the point this morning that Apple may be getting close to a saturation point at the high end where there's not as much growth for them to have because a lot of people at that end already have an iPhone, and those who aren't interested. So they may be starting to hit some limits, maybe some law of large numbers here. And it's, it'll be interesting watching going forward. But, since the iPhone is such a crucial part of the company's, value and business strategy, when estimates start to come down for that device, I think it definitely hurts the stock.
Right. And that's an issue. I mean, look, they cleared more than $8 billion last quarter. They make a lot of money. They have a lot of money on the balance sheet. They pay a dividend. This is a wildly profitable company. The question is, though, when you're paying up for the stock, where's the growth?
That's absolutely true. And even if some of these estimates are going to come true in 2013, they're still probably going to be one of the most profitable companies in the tech sector by a long shot. But with Apple, of course, part of it is just a fact of dealing with some very high expectations. They've done so good for so long that the expectations are very high. So when those expectations start to come down to what may be more realistic levels, I think you start to see it weigh out on the stock more so than you see in some other companies.
Right. All right, Dan Gallagher, appreciate you getting up early to come talk to us, sir, out in San Francisco.